Good afternoon, everybody. Welcome to this webinar. My name's Carl Taylor. I'm a consultant here at Oldfield Advisory. I would like to thank you very much for joining us on this webinar. It's great to have you all on here. We've got great attendance, which is good. So this webinar is really all about the new flexible furlough arrangements that are coming into effect from 1st of July to help employers and employees with the transition back into work. I think many would agree that the job retention scheme has really provided vital support to businesses through this challenging time. It's provided vital funding to allow businesses to survive the severe impacts to their business of this whole coronavirus situation. And it's provided an income for many employees who would otherwise have been made redundant or who might have been laid off with no income. So the original plan was for the scheme to end at the end of June, but the Chancellor has now set out a new scheme that's going to apply from 1st of July onwards, and it's going to provide a phased reduction in the scheme, so there's no sudden cliff edge at the end of June. I think that was a worry that a lot of businesses had, was that at the end of June there was going to be a cliff edge and the support was going to end, but it's not. There's going to be a phased reduction from 1st of July all the way through to October. So we're going to be explaining how this new flexible scheme works in view of helping you plan ahead over the next few months. So I've got Mike Purcell on the webinar today. He's a payroll specialist here at Oldfield. He's got years of experience working with payroll and has been heavily involved in the furlough claims that we've been making for clients so far. Just out of interest, we've claimed a total of 1.1 million in furlough claims for our clients so far. So there's going to be plenty of time for questions and answers at the end of the webinar. So please feel free to put your questions into the question and answer box as we go through. Just make sure you use the Q&A box, not the general chat box. So put your questions in the Q&A box as we go through, and we'll be answering those questions at the end. We will also be sending a copy of the slides by email after the webinar, so look out for that email with a link to the slides and a recording of the webinar. So just before we dive into the detail, I just wanted to give a really brief introduction as to who Oldfield Advisory are, because I know we've got some clients on the webinar who know us very well, and we've got some non-clients on the webinar too who wouldn't have met us before. So just really briefly, we're accountants and tax consultants based in Coventry. We help our clients with strategies to maximize profitability and generate cash. And we also help our clients with smart tax saving strategies to help them reduce their tax liabilities and keep more of what they earn. And at this time, our particular focus is really on helping businesses to navigate through today's challenging times and beyond. So I'm now going to hand over to Mike, who's going to explain in some detail the background to the flexible furlough scheme, what it involves. Is going to go through some of the key dates that you need to know about and you really need to watch out for over the coming days and weeks. He's going to talk about the timeline for how it's going to work over the next month and how to claim. And then we're going to have the question and answers at the end. So I'm going to hand over to Mike. Thank you very much, Mike.
Thank you, Carl, and welcome everybody. With a brief overview of what the new scheme entails. And so currently the job retention scheme allows employers to furlough their employees where there is no work available for them and claim back 80% of their pay from the government. The existing rules mean that any employee who has been furloughed must be furloughed for a minimum of a 3-week period. And during this time, the employee is not allowed to undertake any work for their employer. So in order to bring these employees back to work, the government are introducing the new flexible furlough scheme. This new scheme provides the employer with the flexibility to gradually bring back their staff into the workforce, if required, over a period of time. Therefore, from the 1st of July, employees will now be permitted to work on a part-time basis and still be paid 80% of their wages for the hours they have not worked. The employer will pay in full for any hours they actually work, but will be able to claim for any hours not worked at 80% of their pay from the government. The 2,500 cap currently, which is in place, still remains. This new flexible part-time scheme is only open to employees who have already been furloughed under the old scheme, so that's worth bearing in mind. So the main points of the scheme are as follows. So there'll no longer be a minimum period which you can furlough staff, which is obviously currently the 3-week period. A working hours arrangement must cover at least 1 week and be confirmed to that employee in writing. Any claims submitted must be for a minimum period of 1 week. And from the 1st of July, a claim period would not be able to overlap on calendar months. So the data will need to be submitted on actual hours worked versus the usual hours that employee would be expected to work. Whilst this flexibility will allow you to bring employees back into part-time, you can still continue to claim their full hours under the existing rules if required. So, as I mentioned, the new flexible part-time scheme is only open to employees who have already been furloughed under the old scheme. So the sort of most important date really here is the 10th of June. From this date, from the 1st of July, the furlough period of 3 weeks will need to have been applied for that particular employee. So if you wanted to include an employee in this flexible furlough scheme, they will need to have been furloughed for that minimum 3-week period up to the 30th of June, which means that they will need to be furloughed from the 10th if they haven't already been furloughed. And just another point on that is that the claim for anybody furloughed up to the 30th of June will need to be made before the 31st of July. Okay, so the government are changing the way the funding is received over a period of a time. So rather than just finishing it in 1 month, they're going to gradually taper it down to the end of October. So the table on the screen now shows that in June there's no changes to the current grant, and therefore 80% of the wages will still be able to be claimed up to the £2,500 cap, along with the employer contributions. So from the 1st of July, the only real change here is that you'll be able to bring the employees back into part-time employment, and the cost to the employer will be for those hours that they've actually worked, but then you can still claim for the 80% of the hours not worked, along with the employer contributions relating to those hours. In August, the government are still going to be paying the 80% of the hours not worked, but they're withdrawing the employer contributions. So the employer cost will be in addition of those employer contributions. That's for NI and pensions. And then the following month in September, the government will reduce the 80% down to 70%, which means the employer will then need to top that 70% back up to the 80% with the 10%, and also pay for the employer's contributions. And then in October, they'll reduce it further down to 60%, and then the employer will top that back up with 20%, making that back up to the 80% of the furloughed hours. Just as a sort of basic example of that, this is for an employee who is being furloughed in full for the month at the cap of £2,500. So as you can see there in June, if you see at the bottom there, the total cost for the employer is 0. So nothing has changed there. And that the employee will be able to claim back the entitlement in full. In July, again, nothing's changed because the employee is still on full furlough. But from August, the employer contributions will be withdrawn, and therefore there's a total cost for that employer in August of £303.38 whilst this employee is still on full furlough. In September, the 80% is reduced down to 70%, therefore the cost of the employer will be the additional 10% of £312.50 to make that back up to the 2,500. And also there'll be the cost of the employer contributions, giving a total cost of £615.88. And then in October, the grant will be reduced again by a further 10%, meaning the cost to the employer will then be £625 plus the employer's contribution, giving a total of £928.38, whilst this employee is on full furlough. So the actual claim itself, the government are due to release further guidance on this later this month. It looks like it's going to be the 12th of June when more detailed guidance is released, but it is expected that a claim will be submitted using the existing online portal with some additional information required as to the working hours and non-working hours. So just some sort of key takeaway information from this is the 10th of June is a key date for anybody that you haven't yet furloughed that you think you will need to furlough under the flexible furlough scheme. They will need to be furloughed from the 10th of June for that first full 3-week period under the new under the existing rules. Another sort of key action to sort of take away is that what you'll need to do is start to discuss with the employees that are currently furloughed or likely to be furloughed the possibilities of bringing them back into the workforce on a part-time basis from the 1st of July. And then to also look at your cash flow forecasts and include any of those new funding levels that will be borne by the employer.
That's great. Thanks, Mike. That's three really key actions to take away, isn't it, from here? This 10th of June key date. And I can see there's some questions pinging in about that key date, so we will be answering those shortly. We're discussing with employees and thinking about the possibilities of part-time working arrangements for those that are currently on furlough from 1st of July, and including the new funding levels in your cash flow forecasts. I think that's really key. We need to be planning ahead, and we need to be looking at how things are going to pan out from a cash flow perspective over the next 4 or 5 months. And so you really need to include those new percentages and so on in your cash flow forecast, so you can see how things are going to go over the next couple of months. So we're going to go on to the questions and answers. We've got a whole heap of questions that have come in, and we're looking forward to answering those. Just before I do that, I just had two quick points just to mention. One was, as part of our sort of mission at the moment to help clients through these times, we're inviting attendees to a free COVID-19 action planning call. Look out for a link to this on the follow-up email that will be coming through after this webinar. And I also just wanted to touch on another webinar that we're going to be running next week, next Friday, on how to bounce back without running out of cash. So we all know how critical cash flow is. It's the lifeblood of every business. It's going to be the make or break of businesses at this time. Businesses aren't going to fail because of the lockdown. They'll fail because of poor cash flow management and poor liquidity. So it's a really, really important point. I think we've done some research on this. 55% of businesses are saying they're going to have tight or severely challenged cash flow over the next 6 months. So in this webinar, we're going to be talking about how to ensure we've got enough cash, we've got enough liquidity over the coming months as we go through towards the end of the year, and how to avoid common cash flow pitfalls that we can see potentially on the horizon. So look out for the link to register to that webinar in the follow-up email as well. So we've now got questions and answers. So let me have a look. I'm going to read out the questions, and Mike and myself are going to do our best to answer these. So one question that's popping up quite a bit, seems to be quite a regular one, this one, is just around the employees that have been previously furloughed. So if an employee has previously been furloughed and has been back to work, will we be able to furlough them again from 1st of July under the new flexible scheme? Basically, under the current guidance that's been released, it's not totally clear. It doesn't say either way. It doesn't say whether, there's two scenarios. It might be fine if the employee has been furloughed for a 3-month period, sorry, a 3-week period or more previously, and they've come back to work. That might be okay. Well, on the other hand, the guidance that comes out on the 12th might say that the employee has got to have been furloughed between 10th of June to the end of June for you to be able to then put them on the new scheme. We just don't know at this stage. So basically, you've got two options. One option, which is probably the safest option, is to look at your employees and say, which employees are we likely to need to furlough from 1st of July to any degree, and put those employees on furlough from the 10th of June. And then look out for the guidance that comes out on the 12th of June and see what that says. If the guidance that comes out on the 12th of June clarifies the position and tells us actually, if an employee's been furloughed at any point previously, then they're good to go on the new scheme from 1st of July. Then you can just bring those employees back off furlough on the 12th or 13th of June, and all you've lost is 2 days. So that's probably the safest option. Otherwise, you can, we can just hope that the guidance on the 12th of June confirms that it's enough for an employee to have previously been furloughed. for them to go on the new scheme from 1st of July. But I would say the safest option is probably option 1. Put anyone on furlough that you think might need to go on furlough at any point in the future, put them on the 10th of June. Another question, will employers need to get a new agreement with furloughed employees from 1st of July onwards? Mike, what do you say to that one?
Yeah, effectively, because this will be a new sort of agreement, and currently it will need to be agreed with the employee on a week or a minimum period of a 1 week basis. Then yes, a new agreement will be need to made with that employee for their working hours or working days during that week period. It's only a minimum of a week, so you can agree with them to say, you know, over the next 3 months or 2 months, 1 month, these are your working hours for the next week, for the next 2 weeks. But it does need to be a minimum of 1 week, but can be longer if preferred. But that will need to be in writing with them.
Yeah, that's good. And current agreements are likely to make the point that employees can't do any work while they're on furlough, whereas obviously that's changing from 1st of July. So, okay, another question. Can an employee get another job while on furlough? That is just a subject to your normal rules, basically subject to your contract between the employee and the employer. So it's really down to you as the employer whether you want to allow that or not. There's nothing in the rules of the scheme that prohibit that happening. Another question, how does employers' allowance tie in with making furlough claims? Mike, can you help us with that one?
Yeah, so at the beginning of this tax year, HMRC changed the way employment allowance was claimed. Previously, it was just a given that you could take that employment allowance, but now you have to apply for that employment allowance on an annual basis, and it's treated as a state aid, and therefore HMRC will write to you to tell you that you've been accepted. So once you receive that confirmation, that letter from HMRC, then the employment allowance can be applied to your payroll, and that will then need to be deducted from any furlough claim for the employer's NI.
Good. Thanks for that. Another question we've got here. If an employee who is furloughed decides to hand in his notice, are they still allowed to keep the furlough money to that point? Which is an interesting one. You know, as far as we're aware, you know, up to the point where the you know, while the employee is still an employee, if you like, the furlough scheme is available. Obviously, you can only make a claim up to the point where the employee actually leaves. I don't know if you would have any other comments on that, Mike.
No, I think that's correct as far as the guidance provides at the moment.
Yeah. So another question, hoping you can explain the July scenario a bit more. Just a real quick recap on that. So obviously the situation in July, the actual funding that's available is just exactly the same as it is at the moment. The government will pay up to 80% of the employee's wage, plus the pensions or the national insurance relating to that. However, from 1st of July, there's new flexibility in that you can actually, you know, the employee can actually work part-time And so what that means is that, just say the employee worked for half of their normal hours that they would normally work in the month. Well, you as the employer would pay them their normal wage for those hours that they actually worked. And then for the other half of the time, you'll claim 80% of that from the government, along with the employer's NI and pensions. So hopefully that sort of explains that a bit more. I don't know, Mike, if you'd have anything else to add to that to clarify.
Yeah, the only other thing to take into consideration is the 2,500 cap is sort of based on a pro rata basis.
Yeah.
So you would sort of look at the whole 100% hours worked and not worked together to give you the equivalent of that 80%. And if that's more than 2,500, then obviously 50. If they'd worked 50% and not worked 50%, then the cap would cover up to 1,250.
Yeah, exactly. So the 2.5, as you say, it's pro rata, pro rata to the hours that the employee has or hasn't worked. So again, just going back to that example, say the employee worked half of the hours that you would normally expect them to work in a month. The 2,500 cap is obviously reduced by accordingly to 50%. So the maximum you could actually claim for that employee is £1,250, which is half of the 2,500 cap, if that makes sense. So it's all prorated to the level of work that the employee has done. Relating to that, is the cap a certain amount per month or worked out per day? That kind of links with what we've just been saying. Is prorated. As I say, take that example of an employee that works 50% of the time. Well, the cap will be 50% of the 2,500. Question: can a director be furloughed? Mike, can you help us with that one?
Yeah, current guidance shows that directors can be furloughed, but it may be, obviously you'd need to look at each individual case as to whether that director should be furloughed, depending on how much involvement they've got with the company, really.
Yeah, exactly.
Purely and simply because they would need to have been furloughed initially for the 3 weeks. So, can that company do without that director for 3 weeks, without any input at all, turning off their emails, etc., that sort of scenario? Yeah,
exactly. Yeah. For a director to be furloughed, it's a fairly sort of extreme scenario. The director not being able to actually do any work is quite an extreme scenario, and fairly rare. Just got one more question before we wrap up. Assuming we are not topping up to the 100% and don't bring the employees back part-time before October, what happens if a staff member is unhappy with being paid the reduced 60%? Do they have to accept it? So that's an interesting question. Mike, what do you...
Sorry, could you just
repeat the question?
Yeah.
Yeah, sure. Not sure. Sorry, let me start at the right place. Yeah. Assuming we are not topping up to 100% and don't bring the employees back part-time before October, what if a staff member is unhappy with being paid the reduced 60%? Do they have to accept it?
No, basically the government, you'll still need to pay 80%. It's just that you'll only be able to claim back 60%. So as an employer, they'll still be paid 80% of their furlough pay as normal. but the employer will have to top up the 20% to make it back up to the 80%. It's not topping it up to 100%. The furlough pay should still be 80%. It's just that the government will only fund 60% of that, and then the employer will need to fund the additional 20% to make that back up.
Good. Yeah, that's clear. Good. Well, I think that wraps up the questions. I can't say any more that we haven't answered. I think that covers them all. So that's brilliant. Good. We'd like to thank you again for joining us today. It's been brilliant to have you on board. And look out for the follow-up email that will be coming through shortly with the slides, copy of the recording, and links to register for COVID-19 planning call or the next webinar. Thank you very much for joining us again, and goodbye.
Thank you.